The Bureau of Labor Statistics has released the CPI report. This is the Consumer Price Index summary, and this is the report that shows inflation in the consumer economy. And over the past few months, we've been told by many pundits and economists that the tariff inflation would begin to show up in this report. This is the report from June. It's come out in July, but these are the numbers from June. And the inflation, so-called inflation from tariffs, 10 to 20% tariffs, 50% tariffs on steel, aluminum, copper, 25% tariffs on cars. This is the report that was supposed to show inflation in consumer prices. And some people may be surprised, others may not be surprised that this report came in line with expectations, and with the core rate came in below expectations. So the core rate is excluding energy and food. The core rate for the month came in at 0.2%, and the headline rate came in at 0.3%. It gave us a total 2.7% for the year over year. And this is actually a pretty good report. We don't see anything in the way of 10 to 20% tariffs, 25%, 50% tariffs showing up in this data. It's just not there. So I just wanted to note a few things in this report. And the primary cause of inflation for the month of June was shelter costs. And in the report, I quote, "The index for shelter rose 0.2% in June and was a primary factor in the all items monthly increase." So the biggest factor in inflation for the month of June was actually shelter costs. Now, when we go into a few other items here, new vehicles were minus 3.3%, negative 0.3%. Used cars and trucks, negative 0.7%. The price of new and used cars and trucks declined in the month of June. We have 25% tariffs on cars and trucks. This has been going on for 4 months, 5 months now. We've had tariffs for a total of 5 months that this has been going on. And the inflation is not showing up. In fact, we had declining prices for cars and trucks. Now, the picture is somewhat mixed. We did have some increases for some things. So apparel was up 0.4%. But a lot of these things are going to be mixed. The overall rate is a low rate, and we're coming off years of government spending that drove up the overall rate. I'll show you a chart. CNBC posted a nice chart. I'll show it to you in just a minute. The other thing was medical care commodities up 0.1%, services up 0.3%, and of the services, shelter was the largest of 0.2%. It was the largest factor, the biggest, the most money that people spend on an inflating item. Transportation services up 0.2%, medical care services up 0.6%. So these are just some of the subcomponents of the report. Anyway, I'll show you the overall chart, and we can see how inflation has been over the last few years. So let's look at this chart of the U.S. Consumer Price Index. See year over year from January 2021 to June of 2025, which is the latest data we have available. Now, if you look at 2021, he started out very low. And if you look at today, here we are, we're at 2.7% for all items and 2.9% for the core. Now, if you look back over time, you can see that inflation has been declining. And if you look all the way back to 2022, you'll see the massive rise we have on this chart on the blue line and also on the blue dotted line. Now, that's because we spent over $5 trillion into the economy. When I say we, I'm talking about Uncle Sam, I'm talking about the government during the pandemic, spent $5 trillion into the economy over a very short period of time. That's what caused our massive inflation. And inflation doesn't begin overnight and it doesn't end overnight. You can see the buildup Took about 18 months. And we topped out at around 9% for all items. And then it came down over the past few years, and it's still coming down. It's still declining. We're still spending more than we should be spending, so we still have inflation. And you can see that the all prices drop below the core inflation. The core inflation excludes food and energy and is less volatile, I guess you'd say. You'd notice that it didn't go up so high and it hasn't dropped so low, so it's a little more stable. But here we are, we're on a downward trend. At the beginning of the year in January, we're essentially at 3% inflation. We're down to 2.7 now. So, things are improving. Things are getting better. So that's the CPI for June. That's consumer price inflation for June. We've had tariffs at a minimum of 10% for 5 months. And those tariffs are not showing up in consumer prices. Now, a lot of experts have told us that the consumer always pays the tariff, but that's just not the case. When we look at countries like China, Thailand, Indonesia, they're undergoing deflation right now. China has massive deflation. And why do they have deflation? Because their producers are dropping prices. And why are they dropping prices? Because they are eating the tariffs. They are paying the tariffs into the United States. It's not the consumer that's paying the tariff. Now, you could argue that a tiny amount of the tariff on some things, maybe toys and appliances, those levels were slightly higher, fraction of a percent. You could argue that the U.S. consumer is paying something there, but it's definitely not 10%. It's definitely not 20 or 30%. Nothing even close to that. We're seeing the overall amount of the tariff being pushed up the supply chain. We're not seeing the inflation in the United States. We're seeing the deflation in foreign countries that are being forced to eat the tariffs. Anyway, if you like this kind of content, please give the video a like. If you'd like to see more content like this, please subscribe to my channel, and I'll see you in the next one. Thanks for watching.